Hey, what is up guys? Welcome back to ProTraderPath. I'm back with another video, and since my previous video got some good feedback that people actually found the trade explanation or execution video informative, I thought to come with today's execution as well, but I will try to post less of the execution videos and make more on the lessons that I'm trying to teach you guys. However, this was the trade. I got around 12.68 hour, but the original was looking something like this. Okay, but this is unrealistic to be honest because of the stop loss. It's showing a huge thing, but it all depends on the ticks that you can see. That's 112.25 ticks. That's what exactly I got from that entry. I will share with you guys the PNL and other stuff first, and then I will go with the trade. So the trade looks something like this. I took one lot from the low of the fair value and I expected that order block level, and this candle I marked as a breaker, but there is a reason behind that. It's not a proper breaker over here, but still I marked as a breaker because of another reason. I'll explain that while I will be showing the execution part. However, exactly at that level is where I took another lot, and to give you guys the idea that okay, first thing, this is where I closed a partial. It's around that level, like that black candle's lower portion, and the final take profit was here, as you can see the arrow. So two lots of entry, keeping the same stop loss above that order block high, or this high. If it's you guys are confused about order block, just keep this way, that above this high I put my stop loss. So when market was here, I was expecting that even if this fair value fails to send the price lower, market can reach up until that far and then it can continue lower. I will explain that in a second. So I closed partial. It was more than 1 to 2 since the stop loss was very small, but as I said, I don't care about the amount, or I don't care about how many handles or ticks I got. I just try to close a partial wherever I feel like it's the most obvious area to close a partial. So that was my first partial, which was from this entry. I closed a partial here, and my next entry I closed all the way back down here. Now that is the thing. Now about the entry, if some people may think like, okay, you took in a different area and you are showing this way. So I choose to actually keep the execution levels here. I hope the zoom. See the price 18666. Okay, that's a devil number, 666 pounder. I love that song anyway. And you see this 670.75. Just go back to your chart and see where that 670.50 happens. Okay, or I will just go back to my chart and I will share the 670.50 level. Okay, this line, the order block plus breaker line that I have saved over here, this line, what is the price? That is exactly 670.50. so yeah, my second entry was here and my first entry was at 666. okay, so what is that level? 666. okay, look on the right, you will understand what I'm trying to say, or I will give you a better view. If that doesn't make sense, I will just draw a fib line from here to here, and I will try to make the front bigger so that you guys can see what exactly happened over there. Okay, so the text. Okay, so now look at that OB level that I have drawn over there. What is the price? You can see over here. Wait a second guys, wait a second. And about the middle point, I'll just put a different line because I didn't take any entry around that area. So the first entry 666, that was the fair value gap slow. So on this green candle I got my first entry, and on this huge wick at the highest level is where I got my 670.50 entry. So let me put it side by side so that you guys can see it one last time. 666.00, that's what you are seeing on the left here. 670.50. That's what you are seeing right here. Okay, so yeah, I mean, it is what it is. It's all about your chart time and knowledge, that how much time you are spending on your chart and how you are looking into your chart. This sort of thing I have showed you so many times, that I got the entry at the lowest possible area or the highest possible area for the sell short and lowest possible area for the buy longs. This happened so many times in my executions. You will see there are lots of examples like that. So yeah, it is what it is. Exact high, exact fair value level. Wherever I felt like adding more, I have added more. As simple as that. Now let's explain from the top, like on a bullish day or on a bullish move like this, why I consider taking an entry. First thing is, when market was here, I didn't enter. When market was here, this fair value, I didn't enter. When market was here, I didn't enter. But when market was here, I entered here. So I waited so many break of structures fair value retest for my confirmation. But before all these, why I didn't look for entries here, why I didn't look for entries all around that area, is because if you have watched my previous video on the channel, this is the video I uploaded yesterday during, like, after the FOMC news. And what I said here, look here, keep an eye on the sell side on a higher time frame. If I'm not wrong, we are looking into a market maker sell model on a longer term, and today was the first stage of accumulation happened. So I was expecting the market maker sell model, first stage of accumulation. The second stage of reaccumulation happened during today's earlier session, like all these areas and all these areas. However, those are the liquidity that I said to keep an eye. Even we have more liquidity sitting on the bottom around this area. This is paper, like this is paper trading account connected, so don't worry about what you see over here. It's nothing. I was showing some example during my live stream using that. If you are here, you already know. So let's explain. Okay, I actually pointed a entry, like possible entry around that area, but since I'm in a huge profit, I don't really want to execute around that. But if I executed that 1:2 or a short trade around that area, I could have still got it. However, this new week opening gap was little scary around that area. But yeah, like when I left the runner, I just moved, if I'm not wrong, somewhat around this area is where I trailed my stop loss, so that even if it stops me out, I could still secure some profit. So yeah, I mean, let's talk about the entry. The first thing is, at this level, market was all-time high, right? This is the all-time high, previous all-time high. Let me actually go to a 15-minute chart and show you guys where is the previous all-time high. This is the previous all-time high. Okay, let me do one thing, because this paper trading thing is eating my mind. So that is the buy side liquidity, the BSO. Okay, as you can see, first time when market took that liquidity, it failed to create any fair value. Second time when market took that liquidity, it failed to create any fair value. Now let me go to 1 minute and show you how that looks. So that was the high that market took the liquidity from. It failed to create a fair value here at that level. Like when this candle happened, from that high to the body at this level, I wanted to see a fair value around that or above that. Okay, not below. Below, it's a good thing, so that could have been my first fair value. Above that, if I had another fair value, I would look for continuation towards the upside for some standard deviations or something. Since we don't have any reference for point above that buy side liquidity that I marked over here, so we are not looking into like holding a trade for it to reach to the moon or something. You have to be very careful around this area, because you have no reference point above that high. So when the buy side was first taken, it failed to create any fair value here. When this buy side was taken, it failed to create any fair value here. Now when market was here, I will give you a short explanation or example about this one. Look where the market is retracing or reacting from. Okay, that's the highest week's consequent encouragement. So this can act as a rejection block. Now how this can be a rejection block, how you can confirm that? here comes the ES. You see I have a line says SMT. Okay, not that one. Here, let me zoom in ES. You see that ES has already cleared this buy side liquidity. That buy side liquidity. So let you know that it's coming out from the consequent encouragement of that small little wick or the highest wick that we have. Okay, like wick of the candle, the middle point is the consequent encouragement. It's coming out from there, so you know that. And just before I remove that fib level, look at the rejection from those areas. Bodies failed to close above that, rejecting perfectly or beautifully from that area. So that's the thing. Now why that rejection block is important is because at that high ES created this, NQ created this. Okay, when ES has taken that buy side liquidity, NQ failed to reach above that consequent encouragement, so that rejection block was working strong. Okay, this is the SMT divergence at all-time high that you are looking into. Okay, but as I said, I have very few reference point around this area. I cannot just trust this thing, because since ES has taken the liquidity, NQ can easily take the liquidity too. Now from here I will just minimize this part, and the reason I marked the breaker block, and remember where I took the entry, inside of NQ, I will just go there. You see here, that was the entry, and this was the breaker, because it was a perfect liquidity grab and market structure shift with one fair value, one small little fair value right here. So when ES took the liquidity and market structure shift happened with a small fair value here and here as well, there was a small little fair value. But this liquidity grab, NQ has also taken its liquidity. Now along these moves, there are so many places where you will find SMT divergence. Here ES has taken this liquidity, NQ has created this. Okay, so it has created higher high, it has created lower high. It's coming in my channel, don't worry. And in between it doesn't have any of this that ES have. However, if you look into that, which is this candle, from here ES came this close, NQ never came there. Just look at the curve that you are seeing over here. This is the thing and this is the thing. Okay, just look at the curve that you are seeing. So NQ is more bearish than ES during that time, and ES was more bullish. Now here, see this high and that high, this high and this high. It has again taken liquidity, created that SMT divergence here. It failed to take that liquidity. So these are the things that will give you more confirmation or confidence regarding your entry. But don't just, if you don't know how to use it, wait until I finish my market maker models, and I hope you will find it. So now that ES part is cleared, and the reason I marked that level, this level as my breaker was because of this specific part. Okay, now if that is not a breaker, don't worry about it. Don't try to teach me what I know. I'm happy to go with my thing. Okay, it's working for me. I'm perfectly okay with that. If it's not a breaker, I don't care about breaker. That's my order block. I know it by 1,000 times of looking into the chart and taking entries based on this sort of information. And now let's explain the order block. I talked about it in the previous lesson or video as well, in my live stream as well. But if it's not, if you were not there, or if you're watching this for the first time, since you are already seeing the delivery, I don't care, like I don't really need to explain what happened in between. Just I'm explaining the entry point. And by the way, I might have forgot to show you how much I made with that one. Just let me show you that as well. So that's my TradeOvet account. As you know, I trade in 3 different accounts and copy all the trade in all of them. So this is what I got, $2,766 out of that trade with 2 lots, but 1 lot I have closed partial and the other lot I left runner. So as simple as that. From here until this level, see that partial line, this is where I closed the partial. Now why I closed here was because this was the entry from the fair value this level, which was 666. A stop loss was right at that candle's high, and let me just bring this on back up until that level. Okay, here I have a last fair value gap. Along with that last fair value, this level that I marked, it's the, I know that this is not a very what it calls, this is not something that I look every time, since it has equal lows over there, it has created here, but when market was coming lower, I had no reference point around that area, right? All I had was this. The partial I took here was because of this weak CE. That's the first thing. The second thing is, I always said I look for a 1 to 2 risk to reward, and when I get that 1 to 2, I close a partial if I have any opportunity. So that level, the CE level, was giving me 2.06. I didn't think second time about holding the trade or doing anything. So when the very next candle came and gave me my partial, after that it went a little higher for a retracement, but that is when market created that equal, okay, that relative equal with that one. And now I'm expecting when market is like this IFVZ line that you are seeing, it's not IFVZ, right? It's a fair value gap, the first fair value of this entire move. Even from here there is no fair value here, so this was the first fair value up until that far. This fair value has a job to do, which was when market tapped here, it should go higher, it should clear the liquidity. First of all, this fair value's job was to clear this liquidity. Along with that, if there is any other liquidity level close to each other, which is this one, it could go up until that far. So this fair value's job was done over here. When market was going higher, look here, it has created not a single fair value up until here, and it was disrespected. It created more liquidities around that area, and these liquidities were not taken during that moment, right? So when that happened, market again started going higher, this fair value disrespected. When market going higher, this fair value here disrespected. But when market started going lower, this is what I looked into. Okay, during that moment, the SMT that I already showed you, I looked into. This is the liquidity graph. Since it failed to take that high, I'm marking that as my liquidity graph. Now here you can mark this low as your market structure shift, but since I have another swing low sitting right here, I'm marking this as my market structure shift. This is the fair value. Market tapped into the fair value, no body closed above the fair value. I know it went little higher. I will explain why it went higher, because if you look from that low or even this low up until that far, you had two little fair values over here. This is the first fair value and this is the second fair value. Okay, so market had to either respect the first fair value or the second fair value and go higher, take this high liquidity or that liquidity. It failed to do that, so that became your inversion fair value, and that's how far market went. Okay, if you missed that one, just keep the last fair value and think that this is your inversion fair value. So from where market failed to take the liquidity, it closed below, that's how far it reached. Usually I was looking into this one because that's the entry fair value that was supposed to send the price higher, and this one was supposed to act as a breakaway gap that should left the portion open, or like market should not trade here at all, something like that. So when market failed to do that, failed to take the only liquidity it had, and market broke below that level, that turned into an inversion fair value. See, this came back and revisited that area. When market came lower, gave you the market structure shift, it traded here, but as I said, the proper market structure shift is here. When market did that, it went back, revisited that inversion fair value, then came lower, but still the bodies are telling you the story. The wick reached until that far, the bodies came lower. When it came lower, closed below this, it created another fair value right here. Okay, now here the bodies are not respecting it, but what do I have? This is my first level of defense. The second level of defense, I can mark the order block and the mean threshold of the order block. So market respected the order block level and market started coming lower. When the third market break of structure happened here, it created another fair value. At this level, I'm still not in a trade, right? Why I'm not in a trade is because I don't know if there is a 15 minutes fair value sitting around this level as well. But as I said, I don't know if market is willing to respect that 15 minutes fair value, and after taking these liquidities, market is willing to continue its upper move or not. For that, I needed some added confirmation. When I got the confirmation, look here again on ES during this specific moment. You guys all know how I trade. When I trade, my chart looks something like this. Okay, so I hope you know that part. I will just leave this portion for now because it will be a very long video otherwise, just going to the explanation, because it's in a very bullish trend at all-time high. I have no reference point around that area so that I can go for a trade or something. But since yesterday I know what I'm looking into, I was looking for the sell short. Okay, and that's exactly what I got during the London session, New York session after the coming. Okay, here when this happened, okay, this specific move happened here and market broke below that low, this low. It gave me the second time market structure shift, sorry, the break of a structure, or maybe third time. So market structure shift, break of a structure, yeah, so the second time the break of a structure. So when the second break of a structure happened, I usually look into trade from this fair value, and my experience says that this fair value, if I take a entry, this fair value will act as a breakaway gap, so market will not fill it up. Even if it fills it up, the third candle of that fair value, the reason of my entry is a fair value, the third candle of that fair value, that high will not be violated. This is my own experience from earlier stages, like when I was using my Forex fund on MetaTrader 4. I used to look into the second break of a structure on the Forex pair and I used to enter from there. Stop loss was very tight. If you see my 8.77 hour video, which is a very old execution video, you will find that I have my take profit was showing something like 8.77 hour. So now look, if I entered from here and up until that far, like I'm just showing you, this is 7 point something. Okay, I got even more, but I'm just showing you because of the reason that I'm talking about here. When the second break of a structure happened and all this happened inside of that break of a structure on the ES as well, as you saw, I was still not entering into a trade, just because, like, the only reason I didn't enter from here was because of this 15 minutes bullish fair value. So see that rejection from the middle level, I was not too confident about that setup at this moment because it's running in a very bullish trend and at all-time high. So what I was waiting to see is at least market closing below that 50% level or even below that. I hope you got the point that because of this 15 minutes fair value, I didn't consider entering from here because the CE was still holding the price and it was giving me good reactions from there. However, I'm looking for a bearish setup, right? So I'm looking into all these fair values, how it's getting respected. The only reason I didn't enter from here even after my second break of a structure was because of that 15 minutes fair value. When this candle closed below the 15 minutes fair value, you see it's coming out of a fair value gap as well from here, like this candle. I still didn't consider the very next candle when it closed below that middle level and the 75% level. This is the fair value I looked for my entry. Okay, because I know my buy side is sitting right there, like the sell side liquidity is sitting right around that area. Okay, so I looked for that entry. I entered. First entry was from here. I put my stop loss above this because I believe, or I know for a fact, that this candle should act as an order block, the entire part of that candle. So you see that level that I marked from here until there, I marked, like I was trying to mark two levels, but since I saw it's aligning perfectly, I just marked the negative OB/BB. The reason this is a breaker block, as I said, it's because of the ES, not because of NQ. Although it has traded or taken that liquidity, even with a shallow run, I don't care. As long as I'm seeing the same thing on the other chart as well, the SMT divergence that I'm marking from all these ways, it's giving me good vibe or good feedback. And this shallow run or this relative equal high is actually giving me another SMT divergence with ES. Okay, like this is another SMT divergence at that high. This is the high. Okay, you see, like here, that black candle, this black candle's high is this high. Okay, I'll just move the mouse so that you guys can see. So the high here was taken that way, and then market gave me that market structure shift. Okay, so liquidity grab market structure shift, and this is where I got the high taken, I got the market structure shift, but it's a shallow run. So I'm looking into more bullish ES and more bearish NQ, and that's exactly what I'm seeing right here and here. Okay, so this high looks something like this, and it looks that flat. Okay, it looks like this and that flat. So this is a pure SMT divergence right after the lunch has over or lunch is finished, lunch hour, it's coming like that way. So when this happened, I was looking into that as a breaker here and as a breaker here. Okay, so that's the only reason I looked into a breaker around this sort of thing. Okay, but don't take the breaker, take the order block. I know what I'm saying, but it's okay if it making you more confused or something. For now, think this way, that once that 15 minutes fair value was broken, like the consequent encouragement that was showing so much rejection around that area, once that broken and market created new fair value, it even traded below that and closed back inside. I don't care about that anymore, because now I saw that the upper portion, the middle, both of them failed to hold the price and send it higher. Market traded here for too long. ES has taken the liquidity, NQ has taken the same liquidity with just a tick here as well. ES has gave me another market structure shift or break of structure here. NQ has given me the same thing. ES has created fair value, traded that fair value, continued lower. NQ has done that. This is my next break of a structure that I'm looking into, or if you are not looking this internal structure, this is my next break of a structure. So that's the fair value that should hold and send the price lower. So that was my first entry, and I believe that since it's aligning that good and there is a small little volume imbalance, I believe market will reach until that far. That's why the second entry happened right at that level. Okay, so 666,670.50, which was that level I already showed you. I hope that part is clear. So the second entry I added here, keeping my stop loss right above that area, because I believe market should not go above that candle anymore if I'm on the right side. As simple as that. So when the very next candle tapped in, I got my first entry from here, and I had another limit order sitting right at that level. When market came back to that level after a little bit of this and that, you see it came back where? Right at that level, just a tick at the middle point of that breaker that I'm drawing. If you don't want to call it a breaker, don't worry, it just tapped into that order block level. Okay, now I will explain the order block in a second, like how I use my order block. But from here, you know the rest. I'm gonna just exit out of the trading at this level. I closed a partial because sorry, not at that level, it was 2.06, so the CE of that week. Okay, usually 1:2, but I believe that the CE will be hit, so around this level, 6.06. This is where I took my first partial, which was from this entry to this entry. If you don't know, on trade of it, if you add, let's say you add one lot from this level and you add another lot from this level, even if your average goes to here, okay, I'll just put a different color so that you can understand. Even if your average goes here, the first partial or the first trade that you are going to close, the close will happen based on this entry. So I will just put the second entry in a different manner this way so that you guys can understand the color. So whenever I'm closing a partial, that partial will give me the profit from this entry. Whatever the first entry, wherever the first entry was, I will close the position from there. The second partial that I'm taking, it's from here. So the moment I took my partial, my average was sitting somewhat around this area. Okay, like the middle point. I will just show you the middle point as well, like the average. So around this. Okay, that was the middle point. Why? One lot here, one lot at that level, so that was 2 level, so the average should come at the middle, so that was the middle. Okay, so my average was sitting here. Whenever I closed my first partial, the entry was looking something like this. That was my stop loss, this is my entry, and when market continued lower, it was continuing like this way. So when this retest happened, I literally bought my stop loss above this fair value, because still I know like it is in a hurry. So I thought this candle will at least trade to that far and then go, but as I said, this fair value partially filled. It has position or portion unfilled. When market came below that with a single displacement, I looked into this candle, and if you see the middle point of that one, that wick tapped until that, even this candle was a possible entry for me, but as I said, I am not looking into any more entries when I'm already like having a profit secured and another entry running in a huge profit. And this entry I tried to keep up until that low. My target was this one, just a little below that, around the middle point of this new week opening gap, around this CE, consequent encouragement. But when market created that equal low and it was coming like this, I just moved it to this far. Okay, this is the maybe the first time I became little greedy, and I believed that market will come here, and this candle close gave me more confirmation that yes, it is coming there, because the one single candle, it just closed straight away through that middle point and it came here. Okay, so I moved it because of that exact equal. When market created that exact equal with that low, I just moved it here. But as I said, I had more relative equal lows over there. I targeted that, even though market, if I'm not wrong, market took up until this far, and there was a 1 minute fair value sitting right, yeah, so market took until that far, and there was these two fair value gaps, the first fair value and the second fair value. I will just mark. Okay, like think this way, these are the two fair value gaps, and I believe it tapped into the, yeah, so it tapped into the upper fair value and left the lower one as the breakaway gap. Now market is going higher or whatever, consolidating inside of that new week opening gap. By the time I'm recording, market is actually close. On the daily level, it looks most likely a consolidation like this one. Okay, so it is in the form of creating that bullish fair value, so it's even great, So today it closed above. Now that I have seen my daily chart, I'm bullish. Okay, I'm not bearish anymore, because I believe market will trade inside of this fair value and then continue higher from here, if I'm not wrong about this shallow run. Okay, because whatever you are seeing, SMT, this, that, too many things, this is a shallow run to me. It's not a very good buy side taken around that area on the daily level. It's just a sweep of the liquidity. I know it came closed inside, but I want to see this fair value is getting respected, and market is going higher. Market has cleared its sell side liquidity. See this liquidity grab, somebody closed, a week went like a good amount of area from that low. So from here until here, this is 63 ticks, okay, or 63.75 handle. From here until here, it's just 17.75 handle. Still it's well within that 5 to 20 tick range, but I believe that market should not just stop here and then start to reverse, because previously I don't have that all-time high on the left because of the NQM. However, previously it did the exact same thing around this area. It gave me a very shallow run with that wick, and that actually caused the market come back again after taking this sell side. So market has cleared the sell side from here, traded into this on daily fair value, and from here, after clearing the inducement of the relative equal lows liquidity or all this liquidity, market is shifting higher, it's creating new daily fair value. So I'm now more bullish from here, okay, up until where I can get a disrespect of this huge fair value and something along with that, like some bearish fair value gaps or point of interest. Okay, so yeah, I hope it was insightful. Until next time, take a very good care of yourself, your health, and your loved one. Bye bye.